Hey, this is Randy Finney with the right side of the chart. Today is Thursday, June 22nd, 2017, and I'm starting this video. It's 1 o'clock, a little after 1 o'clock Eastern time. Some interesting developments worth noting today, so I'll do just a quick overview here, some things to watch for, and I'll only focus on the Qs. That's been the leading index for, well, throughout the whole bull market, as we all know, and we've had some interesting technical developments recently. So there's a daily chart, same story, you know, just a series over the years. This goes back 2 years. There was a divergent high there, a series of divergent highs, correction, divergent high, correction, divergent high, correction. Here's a divergent high. So far it started to play out. And if we look at this, zoom in, you can see this downtrend line. So this is what we've seen is we had that big bearish engulfing candle a couple weeks ago on a Friday. We've had this period of consolidation here. You know, and this may be just a consolidation, sort of like a little bit large for a bear flag, but let's see what happens. Or the market may do what it did before. We had some other bearish candles. We had more follow through, much more follow through. As I talked about before, when we had a bearish candle, we had one back here. You can see that there was never any follow through. The market immediately recovered. The dip buyers stepped right in, as they did back here when it was a couple days sideways, and then we moved up. So let's see what happens. This is still anybody's market, and I want to take a look at the 60-minute charts and show you what I'm watching today. So this is pretty interesting. I know there's a lot here. Let's just focus on this orange line up here. This is a pretty significant resistance level. You can see all the reactions back here from above. You can see that's what capped the advance here. That also stopped right around the 50% Fibonacci retracement, and I'm referring to the retracement level right here. Here's the Fib line, really from this whole move down right there. So here's where we are today. We were challenging that resistance. We're right around it. It's right around the 141 level, and so far we've popped above it. But again, this is an intraday basis. So what we're looking at here. Let's see how we close the day. Do we close the day above this level here? Again, I can move that line up just a hair to match that previous reaction high, and it's right around 141. So let's see where we close there. If we go up any higher, there's a 61.8% Fibonacci retracement with a little price resistance that lines up with it as well. But a close above this level, a solid close, would certainly open the door for a potential test of these previous highs in the Qs, and that will certainly dampen the near-term bearish case. But again, let's just watch this. This is intraday stuff. Let's see how the day closes. That's the key level that I'm watching. Again, 141. And you know, if we close above today and drop down tomorrow, we can also do this. Let's take a look at this. There's a nice uptrend line forming as well. We don't have, at least on the 60-minute, any negative divergence, but there's an uptrend line, sort of makes a wedge. Now when you draw a wedge, the upper trend line can be changed. In other words, here we are right now, that forms a bearish wedge, but if we go higher, forms a wedge, we could eventually morph into a price channel, an ascending price channel, and there's big resistance up here. So there's a lot of scenarios, guys, and you know, I'm just want to point out the levels to watch. So here's our next resistance level right there. Let's see if we stop there or if we continue on through. Resistance after that comes in around 142.75 or so. But more importantly, do we close above this 141 level today and then build on those gains? If we do, again, it sort of just muddles up the near-term technical picture, which has been bearish up until now. So let's see if that sticks. Okay, let's run through just the FAAMG stocks, FAAMG, the leading stocks. Here's Apple. Again, we need to go back long-term. This trend line even goes back farther. You know, as I said, very impulsive breakdown, and so we had the primary uptrend line, which Apple had that, again, extremely impulsive breakdown. We had these two white lines here, this one, and I have an extension in this one, and that makes up an ascending broadening wedge pattern. We might have to go out to maybe a 4-hour, go out a little bit longer on this chart. There you can see it. Okay, the fibs kind of muddle things up, but the fibs should be there. Let me just jump back to where we were. In fact, let's go to a 60-minute chart. The bounce in Apple, and again, this is, as you guys all know, the world's largest company, by far the largest component of QQQ, the largest component of the S&P 500. The bounce has been anemic so far. It was a big drop, and we haven't even, well, we did, I should clarify. We hit that 32% retracement level, but not right away. No, that's incorrect, because there's the bottom of the fibs. So far we have not retraced 32. This was on the way down. And either way, again, we're back testing the bottom of that ascending broadening wedge pattern. And when you look at it from a daily chart, here's what it looks like. This is just much more clean to me. We have very clear negative divergence, just like we had negative divergence here when we had a 12% correction in Apple after it broke down from this rising wedge. This is a much more longer, a very well-defined uptrend line. There was that impulsive break. There was support there. I believe I had that line ahead of time, and that's what we've done is we've consolidated. So this, to me, appears like flagging action so far. Trend indicators are bearish with the PPO below zero and all that. So Apple's not looking so hot, and I still maintain my price targets down here. These two levels here. This is the first target, 133.60, and then 127. And you know, if it does play out as a flag, what you would expect is a move roughly equal to the move leading up to the flag, or I should say this is more of a bearish pennant than a bear flag. A pennant takes the form of a pennant, obviously. There it is, if I draw like that. And so if it does break to the downside and Apple can't punch back above there and foil the pattern, then we're probably going to go down and hit my first target there. And again, that's what I had marked when we were up here and I was expecting a breakdown. These were the amounts, so it's not 14% from current levels. It's from back before we broke down when I was expecting Apple to break down. So that's Apple. I spent a lot of time on it because it is worth, you know, it's one of the biggest, it is the biggest company out there. And here's Google, one of the G's in the FAAMG. And you can see I have a lot of lines here, but when you really zoom in, you can see this bearish rising wedge, the white lines here, impulsive breakdown, and a similar flagging pennant type action. And these are all just significant levels. If you see any lines on my chart, whether they're trend lines or horizontal levels, if above they're resistance and if below prices, they're support. So like a lot of things, this one has been pinched between support and resistance. This is a pretty well-defined trend line. You can go back and look at all the reactions on it all the way back here. And look how it acted on there. It overshot it intraday, and as you guys always hear me talk about, the only thing that matters when analyzing a chart on the daily time frame are daily closes. These little candlestick shadows, the tail right here, that's intraday move. It was a momentum fueled downside overshoot. It snapped back up and we closed above there. Hit the top trend line, 1, 2, look at all the reactions on that upper trend line. Look how we closed. Again, it broke below intraday and closed right on it. I have not modified that trend line since we broke down. So you can just see how well technical analysis is working. It's containing this price range right now. And, you know, it's anybody's battle. The bulls want to take out that trend line, especially take out the previous highs. And again, these are the market leading stocks. So let's see what happens. Here's Microsoft. This one hasn't broke down. We had, like everything else, a lot of bearish price action, but we came down, and this is a well-defined support level. And we've been dancing on both that support level and, more importantly, what contained the initial drop a couple weeks ago was this primary uptrend line. So you take a look when you zoom out. I zoomed out to a 2-year period on this daily chart. This is a very large rising wedge type pattern with divergence at the most recent high. You can see the divergence down here. And but the bottom line, until and unless this trend line goes, this is the primary support level that I'm watching on Microsoft. This is our, you know, like again, it's our primary uptrend line. It comes off the 2016 lows. It's been forming for about a year now. And if that breaks, you can see there's horizontal support right there, a couple reactions. There's that trend line right there, a lot of reactions there. So really this intersecting support level, again, and it's assuming a downside break here. So, you know, bulls want to see this, want to see these highs taken out right here. Bears want to see this, and then especially that yellow trend line goes. If that goes, this dual support level right here, I think safe to say that puts a nail in the coffin for Microsoft, at least for the foreseeable future. And here's Amazon. This has been the strongest of the FAAMG stocks lately. Broke down from this minor bearish rising wedge within the much larger pattern. You can see the impulsive breakdown there. Extend that trend line out a little bit. There it is. And we back tested it. But the bigger picture, again, you have to define your trading style. If you're a long-term, a swing trader or a trend trader, this is all noise as long as we're within this pattern. Now, we're certainly at the point getting close to the apex of the wedge where if this thing's going to break down, it will break down. Negative divergence tells me that in the coming weeks to months, it most likely will. But these are your sell signals. So what I would recommend, what I personally have done, well, I watch these every day. I can't tell you I have alerts on all of them, but if any charting platform, you click on a trend line and you can set a price alert. So if I went across the board, set alerts on all of these key levels that haven't broken yet. Like I said, Apple already broke down. Microsoft hasn't. Amazon hasn't. But if you have these alerts going off and you see all these 5 stocks having broken down on the daily time frame, then I can say with the highest degree of confidence, there are no certainties, but I can say with a very high degree of confidence that that long overdue correction will probably set in at that point or be underway. All right, last one is Facebook. It's been relatively strong, but look at that. Look at the divergence right here. We had been diverging. This was a divergent high, but most recently from this point right here, this reaction high to this high, you can see this steep divergence on the PPO and the RSI. And the story behind this one, I have quite a few trend lines, but this was a trend line, and so this yellow line here, along with that upper trend line, forms a rising wedge pattern, and we broke down below it impulsively, and we're back testing it. We're also coming up near the highs. Problem with back tests is you can continue to back test for some period of time, and what you want to see is it roll over. Now, if you zoom in here really tight, you can see a little tiny uptrend line, so a little, we'll call it a micro wedge. And to see that more clear, when I see something like that, I'll go down to a intraday time frame like this 60-minute chart, and then draw a trend line there. Maybe set an alert to just give me a heads up if Facebook breaks that. So that's it. Divergence. Yeah, we had divergence there. Well, that was the breakdown. Let's see what else. Let's just leave it there. Let's keep this one short. Those are the levels I'm watching for. So, like I said, it's anybody's game, bulls or bears here, where we haven't undone the bearish technical damage that was inflicted a couple weeks ago, but nor have we seen any follow through. We're sort of consolidating, and this market's going to break one way or the other. It's going to break between those lows. QQQ, just like Facebook and almost everything else, had that double bottom recently. You can see here we tested. So these are the key levels. Bears, if you're short, you need to see this 137.40-ish level go down here, and bulls want to see this level, again, a solid close above and some follow through. Then you have to take out that resistance there, and then of course you go out to new highs, and you've pretty much smashed the bulk of the bearish case, longer term bearish case, and then you watch to see if those divergences that are in place are taken out on the daily time frame, and that will certainly unwind the bearish case. All right, but as of now, it's still anybody's game here, and these are the levels that I'm watching. Hope you enjoyed it.